Well, good morning, folks. Interesting days in the market, and we've seen all sorts of things going on, including bond yields going back up to 5%, the 10-year bond, and the dollar yen just going through to 150.75 before collapsing back down again. And apparently this was not intervention by the Bank of Japan. This seemed to be institutional triggering of sell orders, which is really interesting because it might mean that actually firms are starting to take the opposite side of the market, and then maybe the Bank of Japan will piggyback upon that. So I think we could go up to 151, 152 on the dollar yen before we move down, just like October last year, about 1 year to the day. We're looking to buy gold. Stocks, I don't know what's going to happen. We're right at key support. I have a suspicion that we're actually entering the buying zone. We're into the sort of fear zone of fear and greed. We're oversold. We're at very key support Fibonacci level, and there are rumors of big firms piling in now that the numbers and the valuations and so on seem to be more or less back on track towards the median. We've also seen good earnings and good reports from various firms, including Google yesterday. We had Meta yesterday with, I don't know, 100 trillion subscribers, and a big rally on Meta holding up quite firm. Microsoft holding up really well. Chip stocks selling off as expected because of the China woes, and Apple a little bit down, but not too bad. And then, of course, we've got uranium, which we're long on, and a couple of other things. We're short on sugar. We're still short on WTI oil, which is moving down still, despite all the stuff going on in the Middle East. And natural gas, well, the rollover should be today for many of you. If it hasn't rolled over, we've gone from $2.95 to $3.30 something, maybe $3.33. So for those of you who managed to get that earnings gap rally, 10-12%, whatever it was, well done. My brokers haven't rolled over yet, so that's going to happen today or tomorrow, maybe tonight, and we should be able to pick up a 10% win on that because the futures December's contract is still at 3.3 something as of an hour ago or so. So all of that's looking quite good. And then Bitcoin, well, we cashed out after a 25% rally on Bitcoin. We cashed out at 34,000. Looks like this is going to continue, but we might have a pullback or we might not have a pullback. I think this rally has left too many people interested in buying Bitcoin well behind them. They thought we would get a dip to buy into. We didn't get that dip. We did see some signs that this was going to go up, and it did, and left a lot of people behind, which means we may not get another dip for quite some time. That's the market wrap up. Let's go and have a look at the charts.
Well, good day, folks. Quick video update. I've just come off the beach and I made it back into the open space. That's not my office, but I'm moving this weekend. Now, as I was opening up this chart, natural gas rolled over for me. We're now at 3.38. We got to 3.37. We're at 3.36 now. I took profit at 3.37, and we're out of this trade right now. You can see the rollover on my broker at Black Bull, but if we go across to the NYMEX chart, you can see we have not yet rolled over. And in fact, the rollover date is tomorrow, not today, but the brokers do it at different times. Some of them are rolling over at the beginning of this week. So the rollover date is actually tomorrow, Friday the 27th, from the November into the December contract. But my broker at Black Bull has rolled over already. So there we go. We've taken profit at 3.37. I don't know if it's going to collapse. The futures prices are still firm at around about that price. So it's probably going to hold up, but I think this is probably the area to take profit right now and wait to see what happens. So I think I covered most of what I wanted to say. There's not a lot to add to what I just briefly covered on the beach, but WTI was still short and hoping for that to move down. We have taken profit on some of this trade, about half of it, on that move down to about 82.7 or 8. And it's bounced back up yesterday. Yesterday's candle is a bullish piercing pattern candle, which is a bit of a worry. It's moved down a wee bit today. We've got these two moving averages above us. We've just retraced back into the heavy traffic, I suppose, the 20 and the 50-day moving average. Let's see if we can keep on moving down. Our profit targets are at $81 and then 78 where the 200 period moving average is. So that's WTI. Stop loss is now at break even, so there's no risk on that trade. Bitcoin, as I said on the beach, I think we may have left too many people behind. Everyone was hoping for a pullback on Bitcoin. It didn't really happen. People were expecting a move back down into 20,000 and maybe even lower. But we just formed this sort of rising, ascending wedge pattern, broke out through the top. We took profit at 34,000. We got in at 28,200, so good profit on that. and we're waiting to see what happens. It's definitely not the place to be buying. We're at key resistance right now. If we look back on the daily chart, you can see we've moved right up into these sort of support levels, which will now become resistance. I don't know if we're going to get a pullback or not. This is a pretty strong breakout from a very clean, beautiful technical pattern. It's a rising wedge, as you can see, which is really formed by the 200 period moving average. And then we had this double bottom over here where we bounced off for the second time. We got in just above 28,000, 28,200 after having closed above those moving averages, which are way below us now. There's the 200, the 50, and the 20. So let's wait and see on Bitcoin. Not the time to be buying, and probably not the time to be selling either. So for that one, we're just out of the market at the moment. Let's look at the US 10-year yield, and yeah, a bit of a move back up there. Quite alarming for a lot of people, but let's see how far we've got. So we sort of moved down, broke through that twin top support, down below it, tried to retest from underneath, failed that the first time. The second time yesterday, we rushed up through there, created havoc in the stock markets, as you will know it when we come to that shortly. And now today we're just pulling back. Let's just put a little Fibonacci tool on here and see exactly where we are. Perhaps we can look at that on the 4-hour chart. So there it is there. There's the 78.6 of the move from the top down to the bottom, this recent move. This is a 4-hour chart. We rushed back up to that 786 and have not closed above it. We formed a little wick high on the 4-hour chart and pulling back down again. We'd like to see this moving down, which could put some oomph back into stocks again, and perhaps some of the other currencies, dollar index coming down, and so on and so forth. One other commodity that we're trading is sugar, and we've been selling sugar for quite a long time now, actually, going back into sort of mid-September, and we're just inching incrementally higher. We've got some divergence on the stochastic and the MACD and the RSI and so on. As this is inching higher, those indicators are inching lower, but we might have to test this channel top. Let's see how we go today. Yesterday's candle was a sort of a hanging man candle pattern, which is kind of bearish. Let's see if we can hold beneath that level there at around 27.90 and then move back down. Our targets for sugar are all the round numbers, so let's start at 26 and then 25 and then 24 and then 23 and then eventually 22. And those are all the fib levels, coincidentally, and the round numbers. So we've got a pretty clear path downwards if and when we start moving in that direction. Sugar's been a little bit strong because of various growing conditions and agricultural situations and weather, but also because oil has been up. And when Brent crude goes up, the oil prices go up. People tend to switch a little bit out of oil into ethanol, and ethanol comes from sugar, and that places pressure on the sugar price to the upward direction. Let's have a look at metals very quickly. Well, gold, we did have a short position on gold, which we thankfully got out of at break even, and this is beginning to move higher again. And remember I said after a 10% move, which is what we've had, we normally get a little bit of a pullback, about $50, and then a continuation. It looks like that pullback's been sufficient. Not quite $50, from $19.95 down to $19.55, so only $40, but it does look like it wants to carry on higher. Gold and the Swiss franc are fueled by geopolitical tensions primarily, and that's what we're seeing at the moment, so that's why we're seeing this rally in gold. But I think we could get a pullback at some stage down to this breakout level. We want to get back down to the top of that channel line before getting into this position again. We want to get back down to the top of this channel line and this conglomeration or confluence of moving averages before buying back into gold. Let's see if we can get that. Every time we've had a similar sort of rally, we've had a bit of a pullback and then a continuation. So we saw it over there. This was going back to November last year, almost a year ago as well. And we saw it in March again this year, a move up, about a 10% move up, then a $50 to $70 pullback and a continuation before topping out at the all-time high. I think we might try and do that again, although I'm not sure if we're going to get the pullback, but let's wait and see. Definitely not the time to be buying gold and probably not the time to be selling it either. So pretty similar to Bitcoin and perhaps even the Swiss franc. When it comes to silver, well, silver's been a bit of a laggard, really, compared to gold, which might make one think that perhaps this rally in gold is a bit isolated, a bit overdone. Some of the other precious metals aren't following suit. I generally don't trade much silver. I do sometimes, but there's nothing particularly exciting about this. Pretty much in a very broad range, as you can see, just moving sideways for much of this year. So I don't know, it's not really moving up as we expect it might do along with gold. So the gold-silver ratio has obviously increased quite dramatically, and gold's a bit of a laggard. And we're seeing the same lag on platinum and palladium. Well, of course, I think now 60% of cars in California, for example, are EVs. So less demand for palladium because it's used primarily in catalytic converters, amongst other things. And then uranium, well, we're long on uranium. We got in at $25 and we're now at $26.40. So quite a good move so far. I still think, though, that we might have to suffer a bit of a pullback after clearing out those over-exuberant bulls at the top. We might have to clear out some more at the bottom and perhaps get down to some of these moving averages, break this channel, stop out a few long hands, get below the support, and maybe down to the 100 or even the 200 period moving average, which could take us down to $22. Right now we're at $26.45. We're in at 25, so happy days. But I'm not discounting the possibility that this could pull back a little bit further. So let's see how that goes. Well, when it comes to stocks, this is really interesting. And I put a tweet up on this and I put some notes up in my private members room. There's still an awful lot of bulls around on the stock market. We've pulled back 9.7% on the SPX. Let's read my comments on Twitter. So here we are on my X feed. And if you want intraday updates and charts and things that I put out throughout the day, go across to ArcisFX on X and subscribe there, follow me, whatever you need to do. But these are the charts that I put up. First of all, this one's a really interesting chart. This is the monthly chart of the S&P. Now, if you look at this, you'd have to say it's pretty difficult to be bearish. We're at key multi-month support. We're at the 20-period moving average, that's this green line, and we're also at the channel bottom, and it's quite a well-defined channel. And we've had a 9.7% pullback, and the fear and greed index has moved sort of deeper into fear, and everyone's getting pretty bearish on the stock markets. Probably just about the right time to buy. So I don't know. I said place your bets, decide what you want to do. I remain cautiously optimistic and bullish on S&P, and along with that NASDAQ and some of the other stocks, probably particularly the tech stocks. I also put a day chart up on Twitter. And this is what the day chart looks like. Same sort of chart with a few more things on it. The day chart looks a bit worse because there's that channel, but we've broken down through all the moving averages. There's the support line, but we are at the 38% Fibonacci level and the channel bottom. And I put a comment up on this. Someone asked me, Joel, thank you very much for the question, are you bullish? And my question was, I'm not sure. I'm not selling here. We're at key support. It's the channel bottom. It's oversold. We've had a 9.7% correction. On the other hand, there's good momentum downwards. Algorithmic and forced selling has been triggered, apparently. We've got lower highs and lower lows on the charts. We saw a big spike in inflation in Australia, which might put the jitters into some of the central banks, including the Federal Reserve. The 10-year yields back up, as I showed you on that previous chart, up to that 78.6% retracement. Will we see that coming down? Banks are flailing around with all sorts of problems. We've got a resilient dollar. We've got loads of spending going on in the markets. GDP is expected to be at around about 4 or 5%. The Fed's being stubborn. The Wall Street Journal's panicking in some of their articles. And this is a bit silly, my cat has fleas, etc., and SPX to the bloody floor. Now, I don't mean bloody in the swear word sense, but blood on the floor bloody. And I put this in italics, seems like time to buy. So I'm going to remain cautiously optimistic. Let's see what's going on today in pre-market. We've dipped down there. Let's have a look at a 1 hour chart just to get a closer look on things. You can see it looks like we may be trying to form a bottom pattern on this 1 hour chart. We've got a beautiful classic rounded bottom with a spike low below it. And if we have a look at the NASDAQ in a similar fashion, it looks even better actually. So here's the NASDAQ also in a channel. We're still above the 200 period moving average, which is quite a long way beneath us. And it's also where the 38% Fibonacci retracement is at around about 13,960. Call it 14,000, the big round number. We might have to get there first before we see any further bounce. But we are at this channel bottom. And if we go to the 1 hour chart on NASDAQ, we're seeing a similar sort of pattern. In fact, just in the last hour or two, we saw the same sort of thing, a rounded bottom, but more determination to move up, and that wick low just down through that support. So far, it looks like we might be holding. When we see 1% down days, we normally see a bounce the following day, on average, in the markets. So we'll be watching these closely as we approach the opening of the US session. I can't see what the pre-market prices are on Nvidia, Apple, Tesla, Microsoft. Microsoft held quite well after their earnings. And we also saw Meta coming out with bumper numbers and doing pretty well as well. So maybe all is not as bad as it seems in the stock market. So let's say I'm cautiously, and the key word is cautiously, optimistic and bullish on the stock markets as we go into the close of this week. What we'd like to see on S&P on the weekly chart is a rejection of this level completely and a wick low here, and maybe even a move back up to this week's highs and slightly higher. We've got 2 days for the market to accomplish that. And then we go across to the yen pairs, and the only one I'm going to really talk about is the dollar yen. I've done many videos on this, and I'll link the most recent one at the end of this one. But today we saw the market move up to 150.80 and then suddenly spike down to 149.80 roughly. So about 100 pips spike up and down, and this 4-hour candle actually closed exactly where it opened. So a big dragonfly doji candle. What's interesting about this move down, we had this parabolic move up and then this massive move down, is that it appears it was not triggered by intervention from the Bank of Japan and the Japanese Ministry of Finance. It looks like it was institutional selling. And that means that maybe firms, financial firms, are starting to take the other side of this trade at this point as we have inched. Actually, we had quite a surge above 150. It'll be really interesting to see how this plays out. I'm watching this closely. I'm already short on this, but with a small position, and I'm looking to add to this on a move down and fade any rallies if we get a dramatic move down, like we did exactly this time last year in 2022. Let's go and have a look at that. There's that big move down. There's the sort of parabolic move up like we had today almost, up to, in this case, 150.180. We got to 150.80 today. A smashing move down, and then the market moving back up again, trying to undo that. But I think institutional selling had already started. The Bank of Japan intervened several times. So I have a small short position on here right now, and I'm looking to add to that if we do get this big move down and we get some rallies after that. I'll look to add more and fade into those rallies as we saw took place last time. We saw that happen several times on the way down, all the way from 150 to below 130. There are some big hedge funds and institutions that I know are already betting on this move down, and I've got some skin in the game in this one, so we'll see how that goes. Maybe some of them were selling a little bit today as well. And then when it comes to the dollar index, well, really, we basically just sort of moving sideways at the moment. We have to allow for the dollar index to go back to the underside of this trend line, which could take us above this recent high at 107.33. We might have to keep on sort of nudging and testing the underside of that trend line, or we may just go higher. A lot will depend on all sorts of things, including the Fed and the 10-year yield and so on. But maybe, just maybe, we can hold beneath this plateau today, and we can see some buying coming into the euro and the pound, and of course, the Japanese yen. Well, I hope you enjoyed that, folks. If you did, please give the video a thumbs up and consider subscribing to the channel. And I just must mention as well, there's a little label at the bottom of this video. If you sign up at my broker and trade with my broker, they're now offering free TradingView charts, the professional version, free of charge. It's fantastic. I highly recommend it. Go and check that out. There's a link below in the description. Have a fantastic trading day. It's almost the weekend, and it's the World Cup rugby final on Saturday. Take care.